test. I hope everyone can hear me all right. Can you guys hear me? If so, do drop a message in the chat. You should be able to anyway. But hope everyone's well. We are going to be looking at GBP and Euro last week because there was some gorgeous delivery. Even though I only done two videos, um, it was still pretty nice in terms of what there was available, especially on the back of NFP. Uh, but it was interesting to see our prices continue to push higher in general. And I will talk about this. I will talk about dollar in the weekly review. But if you remember on Tuesday or Wednesday, I think Tuesday, I'm still looking for dollar to close in this fair value gap. So you can see I was still getting to the top of that, and I do believe we are going to reach that. But yeah, quite a good week in general. And you can see it. Pound didn't quite reach my target, but we bypassed this one, which is nice to see. And then there's no reason we wouldn't try and fill this fair value gap moving into the new week. And of course, Euro managed to grab the sell side I anticipated, but was a little bit more strong um, on the strength side. So yes, hello people, hello. I went on YouTube real quick before this, and I saw that Arjo was live. I was just cussing Arjo out in my Discord server, but yeah, it looks like he does his live streams around the same time, which is interesting. But yeah, let's do some back testing. I haven't back tested in a very long time. Um, so it's good. I'm glad that I've recently got a new computer, so live streams will be easier for me now. Because last time I'd have all sorts of problems with the live streams, lag, and just all sorts of stuff which was unnecessary and that I didn't want. So it's nice to have a working laptop. Um, yeah, change my mouse, even though this ain't working. Cool. So this is GBP USD. Last week we got Monday, Tuesday, Wednesday, Thursday, and Friday. And then what I'm going to do is I'm also going to mark out those PD arrays which I called out on GBP because it's about in order to backtesting is useful when you understand how price is delivering to certain levels. Um, so we're going to get a few of these marked out. Now, obviously, we didn't reach this one, which isn't the end of the world, but yeah, it's just interesting to look at delivery, especially down on the 1 minute, which is what we're going to be doing. And then we also want to mark out significant swing lows, such as here, sell side, and oh, there was this fair value gap. Let's do the ones which have been traded through. So get this one marked out as well. Let me check some the 1 hour. Yeah, I didn't even know. We've already traded through this. This can go. And we'll drop down to the 1 minute. And I'll show you guys how I usually approach these things. Now I need to upgrade. Why have I not upgraded yet? I keep forgetting to get the trading view plus or whatever. So yeah, so we have Sunday. Sunday I tend to ignore. But what's important about Sundays is obviously the opening price. So let's get that opening price marked out for the week. And if you've watched my videos for a while, you'll know that I tend to use the Sunday opening price a lot because based on where we are, when we get to Wednesday, whether we're above the Sunday opening price or below it, you can pretty much you can very easily tell where the market's likely to run and whether it's going to do it in a quick manner or not if we're still hovering above Sunday's opening price and like Wednesday. Um, because generally speaking, you'd like to see the high of the week get made on Monday or Tuesday, and then the low of the week made on Thursday. But when we get to like Wednesdays and we're still just hovering above that Sunday opening price, it makes it easier to say, okay, we're likely going to be hunting for that Sunday level moving into Wednesday and Thursday, and then you'll start looking for PD arrays below it that price would want to target, such as these lows right here. So that's something to take into consideration. We will go to the 1 minute Oh no, apologies, guys. I'm not very organized here. 15 minute in the or 5 minute will do. And the reason is I'm going to mark out the kill zones, which is when we should and shouldn't be trading pretty much. So we have 2 a.m. to 5 a.m., which is the London kill zone. Hopefully you guys already know this, but I understand a lot of people don't really study ICT like that, so they probably don't. And then we have 7 a.m. until 10 a.m., which is the London, which is the New York kill zone. Uh, yeah. And we need to highlight this. Weekly profile low-key work good if you know how to, yeah. To be honest, the weekly profiles I haven't used in a while. I should start looking at them again. But yeah, that's what I mean. You really just need to know the direction that you want to see the week expand, and then when price isn't expanding that way, and it gets to like Wednesday or Thursday, you know you're probably in for quite a big move or something to like for it to catch up. And then we got six. We got 12, 10 till 12, which is London close. And then there's 12 till 4, but I don't really look at that. So that should do. And then we'll just copy these and we'll move them over. And then we'll copy all these and move them over. Now you guys should have these marked out on your charts as well. Like it does help, depending on what session you're trading, obviously. You should have them marked out. But to be honest, I say that I don't like messy charts, especially when I'm trading, but it can help in terms of identifying liquidity and such, and you'll see as we work through this week. And then also we have the Asia range, which is 7 p.m. until midnight. But we'll just add those in as we go along. So the Asia range is probably one of my secret weapons in terms of how I use it. We usually just mark out the high and low of the Asia range. If you watch my backtesting videos before, I always do this. So this will be the low of the Asia range, and then this would be the high. And you can see how price uses this as support. And then what's interesting as well is how it will use it as like a fair value gap, as in once we trade below it, it will use it to trade away from it. Now, although this specific Asia range isn't traded back to until Wednesday, look at how price acts around it. You see, and then it manages to break through it and start to run lower. But yeah, the Asia range in this context isn't the best because we're not using it as we usually do. But any examples, I'll make sure to point it out. So when it comes to trading the London session, it's usually around 3 to 3:30 um, that there's an expansion or a setup forming. So we are going to go to the 1 minute. We will go over to here. And this is what I mean. Look at how price consolidates around the Asia range and then leaves it. So ICT always says around 3 to 3:30 is where he says 3:30. I usually say 3 is where I usually see a setup form. So I usually mark out 3 o'clock. And then as you can see, we have an expansion. We have a fair value gap forming. You can see we've left the Asia range highs, and then price is looking for some kind of high to reach for. Now, obviously, I don't have this data on the 1 minute, and I can't be bothered to keep switching between time frames. But assuming we know that some kind of premium PD array is up here and we're comfortable going long, then we do have a nice setup that forms after 3 at 3:05 exactly. And then there's a nice setup there. So let's take a look at that. And this will be an optimal entry in terms of a fair value gap, a bullish order block coupled with it. And then this is where we'd want to be going long. And this is how you backtest, guys. Like, I know it seems silly because we're working in hindsight, but it's just a matter of training your eyes to identify these things. Because remember, we're looking at time and then we're looking at the price and how we can get in on these moves. Now, obviously, if you wanted to get in earlier, you could, but that, like, after seeing a move like this, for example, an expansion away like this, that is hinting towards higher prices, so to speak. And ICT has also spoke about that very recently spoke about his opening range between midnight and half past midnight. Now I haven't really applied these concepts as of yet. Um, but that is something to think about. But nonetheless, 3 o'clock's when I like to look for my setups in the London kill zone, and that's where I'd want to go long, put my stop loss below here, and then we're assuming that we know that there's PD arrays in the premium, maybe a swing high or a fair value gap that we're trading to, and then we'd obviously offset our positions. So what's interesting here as well is how price returns back to this fair value gap over here. Oh no, it doesn't. It doesn't trade into it, but it returns back to this range. But I'll talk about this in a bit. Let's take a look and mark out anything else we can identify. So there's another opportunity here to go long. And one thing to study here is looking at the way that volume respects the 50% level. So although we're wicking below and filling in this range, you can see price continue to respect the 50% level, which is showing what? Showing a willingness to go higher, which is nice to see. Then we have expansion. You can see we fill this fair value gap. This gets traded to a little bit of consolidation. And then there's not really much here. I know 4 o'clock as well. I don't really like 4 o'clock in the London kill zone can get messy sometimes because it can either keep running or it can retrace like this. Like it tends to do one or the other. And I know it sounds easier said than done, but that's literally what tends to happen. But here you can see we get a little bit of a retracement and it pulls back into this range right here, which happens to be where we had that 3 o'clock setup. So this is obviously a significant price level because you can see our price taps back down into it right here. So you could argue that this is an original consolidation and we're just returning to it because this is a consolidation, back and forth candles, and then there's a large expansion away from that. So if we were looking at this as a range in general and we drag that through, you could argue that this isn't, an original consolidation, but I don't like putting names on things just for the sake of it. And obviously being able to call a reversal like this is a lot easier said than done. So I'm not gonna act like we could easily. When you see sessions between 5 and 7 and it expands with this kind of velocity, that's when you know that the New York kill zone's probably going to be a bit of a mess because it's done all this movement all before New York. So this is ideal for me. And for the record, I wouldn't be trading Mondays anyway, but this is just interesting to see. Um, so yeah, because what I usually do as well with the range between 5 and 7, you can mark out the low. 1 second. Yeah, you can mark out the low of this range and you can mark out the high. And what price tends to do is will go for both sides of the range, similar to the Asia range. And you see how we've tapped the high of this range? Then I'd target the low of this range if it wasn't so expansive, if the range was a little bit smaller. But you can see we just move into the next day. But this is again something to study, but it's just based off previous back testing. I've seen that in this range, say if it was like this big, New York will start, we'll take out one side, and then if we go New York reversal, I could then aim for the low of that range as a target. But this isn't the case, unfortunately, in this week. I see the Jamaican flag. Yes, yes, indeed. I'm actually petition, well, Jamaican as well, but we've got Saint Kitts as well, if you know what I'm going. So I'm not really going to too much into the New York kill zone. This isn't because look at how consolidated it is. This isn't ideal. And then I'm guessing we might have had news. No, we probably didn't. I don't even know what all this is about. We might just move on to the next day, to be honest. This is why I don't like Mondays because they're not really. They're usually pretty unpredictable, um, unless it's following something like following a big move like NFP, like tomorrow, for example. Tomorrow I'd be more interested in Monday, but that Monday right there, unless you're getting in long here or here, then this day in general would just be a mess to me. So let's have a look at Tuesday. And one thing I forgot to mark out on the Monday that we just looked at is the Monday opening price. So let's get that marked out, maybe. So, you can use that similarly to how we use a Sunday. So if by a certain time of the day we're still hovering above that Sunday opening price, that Monday opening, that daily opening price, if we're still above it and it gets to New York, then we can probably we can probably target it. Choking on my own spit here. Not ideal. And then let's also get the Asia range marked out. Starts at 7 p.m. Although it starts at 7 p.m., it's not till 8. If you want to trade the Asian range, you want to be looking around 8 p.m. And also, you don't want to be trading European currencies. You want to be looking at the Australian dollar and things like that. But you can see this Asian range is much bigger. Um, and yeah, the concept I was talking about earlier applies. As in, if we mark out the low, we'll drag it through, and then we mark out the high. And you can see how we instantly take out the high of the Asia range, find support, create the high of the day, and then we're targeting some kind of sell side liquidity. And that's when I can use that Asia range low as a target. You can see that eventually price does manage to reach down into it. Easier said than done though, guys. I'm not like, by no means is this light work. If we go to, again, we're looking at around 3 to 3:30, I'm looking for a setup. And you can see we're in the middle of a retracement. Price comes down. What does it do? Accumulate stops below these lows, and then we get a reversal at 3:30. So this is why I say the setups form between 3 and 3:30, because in this case, our setup would have formed at 3:30, as in, yes, we could have gone short here, but how long would we be going short for? Because if I was to go short in this position, let me make these orange. If I was to be going short in this position here, I probably would have aimed for that Asia range low straight away. And then what would have happened? I would have got stopped. So, there's only so predictable it can get. But still, we should look at how price breaks down and how we deliver. So we create a high at 240, and then we have a break in market structure. The break for me would be here. This is what I'd consider a break in market structure. I think I already have break of structure here, because you see this candle, you see how strong it is. You can see that we close below it, price retraces, and we continue to break away from it. And you can see that price is continuously respecting this bearish order block right here. So there's all these things to consider. We have a breakaway gap right here. So I am going to mark these things out, because this is how we should technically be back testing, even though we're not necessarily quote unquote, trading it. We need to be. So we've got a breakaway gap there. We've got a breaker, high, low, high, high. Price breaks down. You can see how price trades up into the breaker. Technically, we could use that as a shorting opportunity. Easier said than done, especially on the 1 minute. But if we were moving confident, then I guess we could go short there. Stop loss above there. Where could we aim for? If once again this would be an easy target in the fact in that it's relatively close and it's a relatively easy target to trade to. So that's a little scalp, so to speak. And then, like I said, this bearish order block right here. That price taps once, twice, or three times. One, two, three, four. And then again, eventually moves away from that. But when I'm looking at price delivering, I'm looking at how it's taking out significant swing lows. So any lows that stand out, for example, this low, this low, I'm looking at how price trades through it. So it's not just whether it trades to it, it's how it's trading through it. And you can see there was a point where this candle was completely aggressively trading through that. So any kind of retracement after it completely violates this move, that would be a beautiful setup right here for a short, which happens to be in our range between 3 and 330. And this is all assuming we didn't get in on this one here. This is also a perfect setup in terms of shorts. And again, if we look at the 50% levels, you got to appreciate how price is continuing to respect the midpoints. Look at that. Can't make that stuff up. Here as well. Same thing. Respect, respect. And again, we're constantly taking out significant swing lows. And we're respecting bearish PD arrays, sorry, such as this order block right here. And then you'll see how that's used oppositely on the opposite when, we're trading higher, but we'll talk about that in a bit. And it's the same with inversion fair value gaps. So although we could have gone short on the back of this, you can see how it's then used to go long on the buy side of the curve. So this is all just food for thought, and this is how you should be backtesting. I've done hours of backtesting now. I do want to get back into it. I'm going to try and do this weekly because, like I said, you train your eyes to identify these things so that when you are watching price action, it's a lot more predictable, so to speak, in that you almost see it coming, which is interesting, And then we want to buy back our position below this low. So let's put a blue tick right there. And then, yeah, again, getting out at this point, it takes a lot. But you could argue, okay, well, we have the opening price right here, and price does tend to bounce off the back of that. So if we're approaching it like this, we should be wary that there's potential for a reversal at this point, which is what we do get. Anyway, 330 comes, you can see that price starts to break out higher. And other things that could help us get on the right side of the market in terms of, let's say we went short, or let's say we're looking for a setup and we still haven't traded for the day. Other things I'd look at this point would be things like confluence. So I would add the euro dollar at this point, and I would also add the dollar. And what I'd be looking for is um I'd be looking to see how these are acting at the same point. Now there's no direct, is there confluence? There's no confluence here. Just looking. Okay, so there is a little bit. So GBP here is showing a bit of strength. So if you look at this low right here, and then we look at the same, oh, what have I done? So we've got this low right here on GBP, and then if we look at the same low here on Euro, you'll see that Euro has made a little bit of a low, and then you'll see that dollar's made a higher high. So pound's hinting here because it's failing to trade on lower. So there is a little bit of confluence. Now this isn't everything I'd be leaning on, but these are the points in time where I'd be looking actively at the other pairs for that confluence to try and reason my next setup. But nonetheless, you can see we break out higher. We take out a lot of swing highs. So this is a break in market structure. And then we have a fair value gap right here. That price comes and trades into very nicely. And that would be a perfect long. And again, look at how value respects the 50% level. Go along on the back of that. Where would put our stop loss? We can put it at this low. And then where would we be aiming for? Well, again, unfortunately, I don't have the luxury of previous data, but there would be some kind of swing highs or something to be aiming for. And then again, if we're looking down here, how these fair value gaps are traded into, we can assume that price should be able to use these as support. So once we get to that first fair value gap, we want to see price trade through it. What does it do? Does it aggressively find support 50% level? So that this will be what you call first stage. First sta- first stage accumulation will be here, second stage, and then offset would be up here. I think it's like that. I can't remember, but this will be our basically this will be our second stage accumulation because we should be. You can see they're accumulating down here below these lows, so they're accumulating once. Price expands. Second stage accumulation. Buy again, and it's within an inversion fair value gap. And then we want to offset our positions above swing highs, so we might want to take off some of our position above this one, for example. So we'll get out of our position over here. Oh, I just saw that message. 1 second. How do you build the bias in 1 minute? Bias always comes from the higher time frame. So no matter what, so if I'm trading on the 1 minute, I will have a bias on the daily. And then obviously we're looking at time. You need to remember it's all built around time. So when I make my weekly reviews, for example, or my daily reviews, and I'm saying that I want to see this happen in price, I need to be seeing that. I need to see that reflected on the 1 hour and 15 minute. And then based off that, I just stay in line because price is fractal in that what's happening on the 15 minute is happening on the 1 minute, if that makes sense. But yeah, you couldn't just give me a 1 minute chart and then tell me to build a bias because I need a higher time frame, which is why when I'm back testing right now, backtesting is just a matter of looking at the data for what it is, as opposed to when I'm looking at it when we're forward testing. I need to know, okay, there's a certain direction, a certain area I want to see price trade to. Yeah, I use weekly profiles sometimes, but I tend to just assume the most basic, which is open, create high or create the low, expansion middle week, and then create the high or low of the week, moving into Thursday and Friday. This is back testing. This is literally back testing. I'm looking at previous data and I'm testing, but I won't argue with you. You're only describing what's already happened. That's back testing, mate. The hell. But yeah, and through like also like I said, I encourage back testing as well because it's certain times of days that you see certain behavior patterns which will help you in the future. Like the way that you'll approach London session now. I bet you go out if you got your way to look for that 3 o'clock setup or that 3:30 setup. You will see it form and you'll see it form over and over again, and you can build a model um, based off that. No worries. What about PO3? I don't know what PO3 is. This is a disgusting New York session. I wouldn't want to trade that. I'm guessing that's 10 o'clock. Yep. Well, I could. I never took many last week. I took about two. It wouldn't even be worth it. That was Wednesday, and I'd have to go in my phone and find it. If you guys want to see that though, come with you for something. I don't know what you mean by what confluence was used or something. All my confluences are explained in my daily reviews and stuff. So like when I'm calling certain levels, this is everything I want to see play out. AMD. I'm not sure what AMD is. Anyway, I'm gonna skip over this New York session because this isn't nice whatsoever. I mean, we've got the classic 8 o'clock run, and then between 8:30 and 9:30, prices tend to consolidate, which is what we can see happening here. To be honest, times like this though, when we got high impact news at 10 o'clock, it isn't the craziest to expect such heavy consolidation. Um, yeah, it's just not it's market order flow. I don't know what you mean market order flow. I know what you mean by market order flow, but do, are we not looking at that now? Do you wait for we want to form? Love that. Day or higher today. Yo, better questions. In terms of the trades or taking and stuff, message me in Discord. I'm happy to share it all over there. It's just that I use MetaTrader, so having to go into there and then translate it onto here is long. Do you wait for weekly profile to form the low of the day or higher of the day? Uh, I No, I don't. Do you enter for a setup during Asia session if you see it or wait? Yeah, that's a yeah. Entering setups during Asia is a bad habit. I've done that multiple times and it will eat me alive. When it comes to Asia session, I don't tend to trade it at all. What you'll find is that I only use the Asia session again as like a barometer for price to see how price where it's at. So like I said, if we're in London and we're approaching New York and we're still above the Asia range high and we haven't taken out the Asia range low, we've got high impact news coming up, and we're taking out significant swing highs, then there's no reason to expect that price won't target those lows, and that's what we see happening here, for example. Now, a week like this with non-farm payroll is dangerous in general because look at this, you don't want to be caught up in that. But any other week, and you'll see how useful that Asia range is. Studying NFP weeks isn't the best example of a general week just because obviously it's NFP, so there's way more manipulation and it's the way that they consolidate price is different. No, okay, mate. But yeah, the way that we use the daily open range as well is the same way we'd use it on the weekly. So when it comes, although you don't wait necessarily for certain things to appear, it's like, how do I explain it? I'll know on basically the day before, I know what I want to see in price. And then if the London sessions go in line with that, then I'll either get in on London or I'll wait for New York to get in on the main expansion for the day. But like I said, when you have days like this and the high impact news is all the way at 10 o'clock, you can see how they put a lot of high resistance in price before that 10 o'clock news move, which they then push price. So it's all dependent, to be honest. But we'll go to the next day and we'll do the same thing with Asia. This will be a good example of the Asia range at work. So remember, I was saying how we need to see both sides of the Asia. I'll paste the link in a bit. It should be in the description. If not, it's in the description of every other video. You seem pretty talkative though. It'll be good to have you in the Discord because it's really quiet, even though there's 400 people in there for the record. Guys, honestly, if you're in the Discord and you're not talking, what go on? So here's what I mean by the Asian range. So once the high of the Asian range got taken, we should assume that the south side should get taken. And you can see here, this is an example of it. We've taken out the high. So now we can aim for the low. And obviously this isn't the biggest of moves, but in terms of its rule, like imagine in terms of that rule in general, this is an example of that. And then you can also use the 50% level, which happens to be where price is consolidating over here. And you can see how price consolidates at that price point and then uses it to trade away from it. Mm. I don't think there's a best window. It depends on the day. There's times I'll look at the London session and be like, nope, not getting involved. And then New York will come and it will look beautiful. Or there's times I'll get in New York, in London, and be like, yes. And then New York will come around and not getting both. Or there's days where you can do both and you can trade one side off. You can trade one side of London. You can trade one side of London and then trade one side off New York following it. Got through a day and actually take a trade if you're okay with the trade. That's back testing. Yeah, just skip. Do some real. But I don't know what you mean. Yeah, So again, I'm looking at 3 o'clock to 3:30 for setups here. And then we have this really deep retracement again into this premium of this range that's created. And then you can see that price continues and attacks that Asia range from earlier in the week. Now, I don't want to confuse us too much, so I'm going to get rid of this. But there are ways you can use Asia ranges. Like I said, they act like fair value gaps in that you can drag them right through the week, and then you can see our price refers to them, a bit like daily opening prices, or a bit like Sunday opening prices on a monthly. If you were to plot like the past 3 months of Sundays, you'll see our price runs between them levels. So Asia range is similar in that you could have a Asian range from days ago or weeks ago, and price will still refer to it and treat it as so. And this is an example of that in how we're treating it, as in like look at this, and then we attack it on the downside and use it as resistance right here. But again, it's whether you want to have these things marked out on your charts or to remember having them, because it's really easy to get your charts messy, so to speak. So yeah, that's a story for another day. But generally speaking, Asia range is definitely my favorite. Um, what do you call it? I'm not even sure. My favorite weapon. That took a while. So if I was to be in the London range here anyway, I'd be looking for again 3 p.m., 3 a.m. sorry to 3:30. This setup, you can already see that we've had this massive displacement here. All of this consolidation, you see how heavy this consolidation is? Price is unlikely to be able to trade back through such a consolidation. So if we were to drag this through like that, you can see that if we look at the middle of the range, you see how price bumps that and then leaves it. That's because this is how we know that price is likely going to continue running lower, because the amount of effort price, like when people want bias and whether to know, oh, is it going to keep going up, is it going to keep going down, it's like times like this, it's very obvious to me that price is going to keep headed to the south side. And there's a few reasons. One, remember, we're at Wednesday now and we're still above that Sunday open. Remember, this is that Sunday opening price. We're still above that Sunday opening price. So it's about time we get to the other side of that. You got to look at it like it's like it's a barometer. It's like a swing, right? If the swing is for too long on one side of the curve, it creates, a swing. It's got to swing to the other side, right? At some point. So that's one reason that's keeping me there. Like I said, this is a very heavy consolidation. It's consolidated for how many hours? Anyway, time doesn't necessarily matter, but well, it does matter. But my point is, the consolidation this heavy, price isn't going to easily get through that, and if it does, it will need to be on the back of news. And I'm pretty sure, did we even have we did have high impact news on Thursday, but it wasn't till later, and you can see we ran between 5 and 7 anyway. But my point is, it's it's looking at how we're respecting these things. So so if we bump the 50% level of that consolidation, and then we have an aggressive break in market structure, and then we hit the London session where there's a setup forming with a fair value gap there, and then price continues, and then we've got relative equal lows below here between this low and this low, and look at how price chops through that beautifully, and then again we'll also get into the bottom of that Asia range. So the Asia range adds to the consolidation in that first we've got the consolidation that we're respecting the 50% and then leaving, so it'll be hard to get through that. And then we've got the Asia range on top of that. Once we've left that Asia range low, even if price wanted to come back through it, it would take a while. It would take very high. It'll be very high resistance to get through that. So we're seeing all these things like layer on top of each other, which builds confluence at the end of the day before it continues to displace to the downside. If London takes aside Asia range, does that mean that New York will be low probability? No. If London takes Asia range sides, as in both, if you're talking about Both, no, no, not generally. It's usually Asia. Asia. I mean, New York tends to be low probability when you have a lot of movement before 7 o'clock. For example, this. When you've done all the work before 7 o'clock, it's typical for New York to just completely what do you call it? To completely consolidate like this. There's times where we might take both sides of the Asia range, but there's not this much movement, and then we get to New York and we have a continuation, and then you'll get in a nice move on New York, or you'll get that classic New York reversal, and then it'll target that Asia range high again because there'll be a high formed or some relative equal highs, and price will target that. Well, it's interesting to see that the way they engineer it in, because that's essentially what's happening. They're using the Asia range to engineer the liquidity on the buy side and the sell side, and then they use that as targets. So let's assume we did manage to get in on here. Again, easier said than done. But in a dream world, we go short here. Now, don't get me wrong, if I saw price running like this, higher, 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 this would drive me insane to go short at it. But we got to think about these things. If I was to go short here, I'd probably put my stop loss within the Asia range because, as far as I'm concerned, price shouldn't be able to tap into it. And also, there's things along here which are signatures in price that should protect it. So, for example, this high, you see how we attacked this high right here? I'll show you now. Price grabbed that high and broke down. We've got some relative equal highs here, here, and here. Price grabbed that high and broke down. So if we break this high or if we broke that high, that would be a whole break in market structure and it would reverse the whole system as far as I'm concerned. But we're failing to do that. So I'm happy for price to stay within this range. But when you see highs like this getting taken, I can show you so many examples. Even here, it's these little things and it happens on all time frames. And it's like a little signature to show, okay, cool, price shouldn't be able to get back above that now. Price shouldn't be able to go get back above that now. Price shouldn't be able to go get back above that now. Then we have some large expansion, deep retracement, yes. Then we continue, and we have the same thing happen again. We have a high here. What we take out those stops, price doesn't go back above it. Even here, do we even take that? Okay, maybe that's a bad example. Yeah, that's a bad example. But here's another example right here. It's when you see these little highs getting grabbed and then price moves away from it, consistently happening. And then we have the large expansion. Now, I don't know. I don't think there was high impact news. I doubt there was. And it's really easy to miss. It's really easy to miss these moves like this when prices keeps running between 5 and 7. But remember, we want to see price on the other side of this Sunday opening price anyway. So there would be no reason we wouldn't want to hold on to our position because we're expecting to at least reach here anyway. So that's something to consider. And then, like I said, this I'm gonna skip over this New York because again, I wouldn't want to be trading it anyway. Um, and it's not really worth stressing our heads. But one thing to take note of is look at this low, look at this low, look at this low, look at this low. So this is when I made my video, I believe. It was on a Tuesday. I can't remember when I made the video last week, but these are way too smooth for price to leave. So this is what are they doing? They're engineering the liquidity. They're building in that south side liquidity. I am gonna finish up very soon, guys. But again, like I said, make sure to join the Discord. I will add it in at the end. In fact, I should add it in and on it, shouldn't I? Let me see. It won't take me a minute. So we have south side liquidity there, and then you can see our price tax that first thing in the morning. Thursday, not really much whatsoever, but Thursday we do hit our fair value gap. And you remember me calling this out as well. So that's another thing that I forgot about that. So when we were all the way over here, remember I had this bias, I had this willing wantingness to want to see this fair value gap get filled. So that's another reason as to why I was happy, why I'd be happy to enter a trade there, and why we'd not expect price to be able to, why we wouldn't expect it to reverse, because I'm guessing that would be one of the biggest fears. Oh, what if it reverses on us? There's a million reasons why it shouldn't, and then this fair value gap down here was just another reason to be added to that. Now I am going to add the Discord if any of you aren't in there right now. Edit invite link. Never. Generate new link. Copy. Use create. Sometimes I use that. What? Where's my link? Hidden. Use a copy button. Okay, I don't know why it's not working, guys. Um, I'll see what I can do. But yeah, we finally fill that fair value gap in. Um, not the cleanest of days. Again, this week isn't the best. It's non-farm payroll week, guys. Um, we bumped that south side again. Very interesting. Not really much going on here. This is a nice New York session though. And what do I mean by nice? When I see a New York session, there's a certain direction I expect it to expand. I want to see price move in the opposite direction until about 8 o'clock. So when I see this opening and you see our price is trading lower, let's say I wanted to see price expand during the New York to the upside, then I'm happy and I'm actively looking for New York to drop between 7 and 8. And you can see that's what we get here. And then 8 o'clock is when the setup tends to form. And you can see we drop down into this fair value gap right here. And this happens pretty much every day, guys. Again, look at the respect, go long, stop loss below here, and then where do we aim for? Well, a nice easy target is London highs. Now this is again, I'm gonna do some more back testing videos, but you can use London highs and London lows as targets for price. The same way you do with the Asia range highs and lows, same thing. Um, and then there was this high as well, but the London high would have been my target because it's just easier. And you can see our prices failed to take it out once, twice. So they're leaving this intact for a reason. And then we get this reversal at 45, expansion, setup forms at 8 o'clock as we anticipate. And then we can go long up to here and let for positions. Entry, usually 5 minute or 1 minute. It depends really, because there's been times I've done a little bit of swing trading, and I'll be entering on like 15 minute, 1 hour or something. But generally, if I'm day trading, it'll be the 1 minute. Um, I'll aim for, yeah, and that's just because you want to get in when it's offering these kind of setups here, you know. But it can drive you insane. And then here's another example of the Asia range, how both sides of the Asia range get targeted. So let's just quickly draw this out. So between this low and this high, drag that through. Then what happens? So Asia range low gets taken, kind of, is it? Well, the low's here, isn't it? Yeah, I guess it gets taken there. And then we get reversal, and then we aim for the high of it. So price runs, takes out the Asia range high. And then, of course, you can see our price drops deeper as we anticipated this week. But yeah, very interested, to say the least. Again, this is the last time I'm gonna say this. This isn't the best week for me to back test. I did think it was some beautiful. There was some beautiful delivery. There was some nice setups though. Um, Weeks like these, you do want to be more in for like long term holding. What the hell is this? You do want to be in for more long term holding, like as in maybe Monday to Wednesday afternoon or Thursday. As opposed to day trading. I tend not to day trade like that when it comes to non-farm payroll weeks, or trade at all when it comes to non-farm payroll weeks, just because the danger within it. But like for example, next week I know it's probably going to be very clean, so I'll definitely be in it next week. So make sure to turn on post notifications. But yeah, that's gonna be everything, guys. Thank you so much for watching. Don't forget to drop a like. Thank you to everyone who commented. Seems like we upset a little bit of people inside the chat. And make sure to join it. Let me see if I can sort out this Discord for you guys, because I'm confused myself. Streaming mode is enabled. Usernames have been. That's fine, mate. Okay, right. I got it. Invite now. Invite people. Copy. All right. So here's the Discord, guys. There you go. If there's anything, that was GBP. I was gonna go for Euro as well, but I'm not gonna backtest on the 1 minute like that over here. I might take a look at a few more, a few more uh, currency pairs. If there's any that you want me to take a look at, I might take see what GBP, what USD JPY is up to and such. Beautiful delivery on Euro last week though. I'm very happy with that. What I'm not liking is these higher time frames right now though. I will be honest, as in just seeing how aggressively we're moving to the downside. It's not ideal economically and trading wise in general. It's not really the most hopeful of situations. But I'm hoping that dollar will turn once it reaches that level. Let's take a look at JPY, who I haven't seen in a while. Wasn't this at all-time highs? Am I tripping? I was looking at this bearish order block on JPY to see how it acts around it. And there's a nice premium fair value gap. Now, if they leave this open, then we're in for a run. But I doubt it. I doubt they will. Does anyone trade USD JPY? I traded it like once or twice. Very interesting. Nice. How do you find it? Oh yeah, USD. Yeah, I forgot about I forgot about these pairs. You forget. I forget, and I did take like a massive break. Oh, would you look at that? How convenient. Let's take a look. Oh my. Yeah, I like the look of I like the look of this for the year. That might be a stretch. And does anyone have any Bitcoin? Yeah, he said it. Bitcoin? I remember I called Bitcoin with my friends like in 2023. None of them were listening to me. Jeez. Oh my. Okay. Yeah, I should definitely get back into all these other pairs. I forget that they exist, you know. But some of them are probably easier to trade at certain times of the year, so I should certainly consider trading them. Because there's times of the year when I remember last year as well, there's times when GBP and euro was so fickle and just difficult to trade and were just not nice, and it was just really consolidated. Whereas if I just came over to this side, I probably would have been having a wild time, you know? See what gold's up to. You know what I haven't looked at actually in a while as well? It's US oil. That's where you really want to find out what's going on. But yeah. Anyway, that's gonna be everything, guys. Thank you so much for watching. Peace. Don't forget to join the Discord.